Well, good afternoon, folks. Hey, it's Shooter, Scott Henderson. Going to do a little quick review, cover a couple of charts for you folks. Of course, at the end of the presentation, please do review our disclosure. All right, we're taking a look at a weekly chart on the NASDAQ via QQQ. Note this internal broadening formation. We're inside of a larger broadening formation as well. So at some point, I'm thinking if we take our prior two highs here at 715.24 high, roughly at 502, and then our 12/16/24 high roughly at about 540.04. Equality for me is really about here, so we're overshooting. Now, Lux Algo's Elliott Wave Absolute is suggesting that we roll over here. I tend to agree. However, that doesn't confirm until we break below this 559 on a weekly basis and close below there. And then we're just chasing our levels from there on the way back down. But let me drill down for a minute, seeing a very similar visual, not quite as deep of a retrace on the daily. I think this is much more valid. We have this demand shelf roughly at 530. I think it's an important spot. But note, when we look at pattern, and this is the challenging part. So if, this is our A, B, C, D, E, right? Then we should do something like this before we break down and fail. So that's sort of my thought. Looking at the weekly on the S&P 500, getting a little overdone as well. However, I'm going to go back to my visual, at least the way I see this broadening formation, is that if that is our second tag, we have basically our first tag, and this could extend all the way up to 780 before we get a breakdown. They continue to get more extreme, so we could get a back test here, and then we keep going and still putting in our third drive up here between 750 and 780, getting some clear divergence in the count. However, I'm going to come back to my thesis on peaking drives. So, we've got peaking drive 1, peaking drive 2, and peaking drive 3 here, right? So really, we've got like an ABC. So this is really peaking drive 1. So we're going to get a 2, and we're going to get a 3 up here. So I still see a lot of upside. And the way these dip buyers are, I just cannot catch a bid to the downside. And I'm pretty good counter trend. And there's just not enough follow through there. We're getting little drawdowns, but they're not deep enough where you can stick them out. As far as premium's concerned, it's so choppy, it's very challenging. So that implies to me that we have a lot of buyers on the sideline. They're looking for a reason to chomp the bit. And until they have a reason otherwise, and I'm talking bad jobs, huge inflation numbers, right? Tariffs getting removed. But then again, I have a mixed bag about tariffs. I don't know whether the tariffs becoming illegal hurt the economy. Well, it probably would, because we don't have another source of revenue to pay the debt. But on the flip side of the coin, it's going to help companies. So we might actually get a bid if it's actually proven that the tariffs are illegal. Now, it doesn't mean we're in better shape longer run, because I do tend to agree that we need to fix our national debt in some way. And right now, that's the only plan that even seemed to work a little bit. I'll take $200 billion to pay that down. We have to come back and ultimately look at our masters and say, hey, what are we going to do here when we do run out of resources as far as how we're going to fund things? So, right now we're up at my trend resistance line, right smack at it. I'd love for a decent pullback, but we got nothing here on this drawback. Nothing. One candle as far as the weekly. One little weekly candle, no follow through whatsoever. Nothing compared to the follow through that we have received here. So looking at the tape and this kind of a drawdown, it's not likely we get this kind of drawdown following. We need a couple of retraces that are shallow in here, something more to these degrees than something that's this aggressive. So, at this point, I'm not liquidating any more of my positions. I'm trying to hold them. Just like we carried some QQQ puts over the weekend, and that worked for a nice little double. That insulated against whatever drawdown we were experiencing, names we were holding. All right, let's go through some names now that you guys survived my rant. All right, XOM, it's done nothing wrong, but it does look like it's going to break down. So my line in the sand, this is, going to go back to my confirming trend support and my thesis there. So, all right, let's just make this simple. So I'd use an anchor at 58.79, and then I would use my anchor at 106.10. It breaks that trend support, I would be trimming, or I would be selling covered calls, which you could sell covered calls here anyways. It really hasn't done anything wrong from that standpoint. We're still building this base. I think oil infrastructure is going to have some significant upside, and that just I can't imagine that we get back down to $50 oil. But realize, even where we are with oil, look at what Exxon is doing. I mean, this has a lot to do with what's going on in the Permian there, where they're pumping, and even their other exposure here in the U.S. But they have a lot of interest in a number of international fields. So I think they're better insulated when it comes down to. Okay, looking at BBAI, I think we come back down to this 28.50. Then I like it as far as a shot for that. It hasn't broken this ABC structure yet. I mean, it hasn't taken out this low. It might not. And then we would continue on towards. However, one thing I'm noticing in the names, in the AI name, is unless they have a deep moat like Google, and by the way, Google's still solid position here. I mean, I'll go through that in a minute. But, I think the midstream names, and what I mean by midstreams is sort of the peripheral services in AI, haven't got a bid yet, because their bid is going to come in when the other data centers get built out and all those peripherals get build that out. So, I don't see that until at least the second quarter of 2026. So in some of those names, we're probably a little early, and we might be a little earlier here. But you surely could sell some 30 cash secured puts. Now, NEO here has done absolutely nothing wrong at 626, looking for about $8 on our count. That's just where it is. Nothing's really changed. It's one name I am holding. I just like the growth story. Big Sky, it's not taken out our 1536. So, it's right there. I like the idea of the squeeze for continuation up here. Peaking drive 1, peaking drive 2. So we're going to get peaking drive 3 up here around $30-$35. It takes out that 1536. We have to reassess, take half off, and then we'll load back down at 12 or 12.50 is the thought. Now, ServiceNow, I'm going to have to go down to the daily on this one. It took out my prior support. So you should be at least at 50% of the position size if you haven't been stopped out on the rest. But it really has done nothing wrong. I mean, this shelf is held, right? So I like the idea of a piece of this to the upside. I think minimum, and I'm being very conservative in saying the 618 here back to $14. An ABC structure. This is one that I want a piece of longer term, just because I think it is a big benefactor from AI. So equality, ABC puts us at $18. So we want to try and keep a position or get into a position here on this. That's just my thought. If you need to sell covered calls to insulate a little bit during this period of ruckus, I guess, then so be it. Now, JLB is continuing to bleed here. And I know some of you are like, no duh. But that's going to be the MO for a while in this market. We're going to see a lot of names who we would otherwise not see continue lower. I'm just moving this to structurally see where I'm at. We are testing the shelf. Elliott Wave Absolute measures it back up to the 3618 at 27. It's still not broken. We have a demand shelf here. It's messy though, like a lot of names right now. A lot of names are messy because I think there's a lot of insecurity, at least my take here. So I'm looking at this as my demand shelf right here. As long as this holds, it's still a launching pad because we have this. So really, it could pull back to this 100 fib at 1133. Obviously, it's a better price there if you don't have a position on. But, JLBY, I think, is a benefactor with AI and drones. So, I mean, that's, again, another name. RSI is still pulling lower, so it's still drifting lower with these markets. So just manage your risk accordingly. EOS looks good, about ready to pull back. I'd move my anchors up. The risk, 50% of that last general. Looks real good, actually. I think we talked about this one before. So roughly 712 is your second anchor versus from the 61. I would do nothing, on smaller name. I mean, if you can get some premium on some covered calls, you might want to sell some 850s or $8 just because of that wick off candle. Get some premium on it. That'd probably be the most that I would do. Otherwise, put your stops in and just let it take you out. Sort of the mindset that I have with a lot of names right now. You just set up your trade, let it run. Well, Robert, we've got LBTR, but it's not pulling up. So I can't tell you. Is that a fund? Maybe. I don't know. Can't pull it up, so I can't look at it. Irene. Same scenario. Tighten up your risk. The base of your general candle here. So roughly 530 is your confirming trend support anchor for your base, and your secondary anchor is 2540. Same thing. Could sell some covered calls up here. 35s, maybe 32s if you wanted to, because I think the market does get soft here, or we flatten out. We go into this stagflation. You have some clear, confirming high, divergent high. Got that back test. So this is peaking drive 1. This is peaking drive 2. So we're probably going to get this kind of pullback here. So this Elliott wave absolute back to 22 is totally viable as far as I'm concerned. So just decide how you want to insulate, or if you want to just take some profits and re-enter at 22 or 23, that's viable as well. Now, Wolf, I'd push up as far as my anchor, gave it a little bit of room. It's getting a little noisy here, and we got our push up. So I'd run 860 as my secondary anchor, with the first anchor being at 92. If it takes you out, so be it. That's, it's just going to be the way this market is. I think a lot of the, it structurally has quite a little bit of upside, but I don't think Mr. Market's going to give it to us. I think Mr. Market's going to give us these back tests, and then we get a better entry potentially. That's just my thought. WULFLENZ. Done nothing wrong here as well. Come down to my daily here. I just go to your prior wick on your anchor. Go to this 34.88. I just tighten it up because it does look to me like it's going to roll back over to 31, but it's done nothing wrong. Just a slow grind to the upside. Let's just talk about Google here. This is what's referred to as an invalidated head and shoulders, which is one reason I don't necessarily like to trade today. I don't know why everybody likes it. I don't know. Maybe it's because I haven't had a tremendous amount of success with them, I guess. I don't know. All right, just cleaning up this chart. Google's getting a little toppy here. I'd love a pullback off of this gap. However, it's probably not done. And I'm coming in here because I'm just showing the measurements on the mound, the distance. This one's a little shallow. So yeah, we could come back to here. I mean, we could. It measures to it. However, this is really noisy. This becomes a broadening formation. So we've got our third tag. So we're looking at this. So, I mean, it has the viability to really pull back. However, it's done nothing wrong. It really hasn't. It's just beautiful. I should have more on this than because I saw it. I had it. I'm just looking at my levels as far as my fibs. Let's see where on each leg. So I want to visually see. So our extension here is we're at the 123.6, which is very viable to the upside. Okay. Tends to imply it's a little euphoric because it's above equality. So equality up here is 267. Euphoria starts in around 297. Looking at this from a flagpole concept, equality puts us up closer to the 315. So wherever this back test comes in here, that's a buy. Wherever 200, even scale, have some 190, 195, 200s. Good spot to put some good cancel orders on this. Okay, one other one I wanted to cover, URA. Even though we have Elliott Wave Absolute showing us a pretty decent drawdown, I think this has got some serious euphoria. I think it's building just this flag to break out here. So those of you who are in it, hold. That would apply to UUUU as well. Now, BMNR, I think data, have mercy. Talk about a messy chart. There's a lot of sellers up here. Okay, at this point, it's done nothing, really nothing, done nothing wrong. Now, like I'd mentioned before, I'm giving this a little room because I think a lot of this is going to be, I think it's a position based on Ethereum and the fact that yield is going to come in from the structure itself in a dividend kind of way, but it's coming in the BMR as they're going. And I think that's just going to pump value. So once we got this push and then this back test, I just think that it's something that's going to build out over time. And of course, fund strats all over this too. So, I mean, except for as soon as Fundstrap got all over it, it pulled off from the $55 level, which is where I was really excited on it. But at this point, it's done nothing wrong. And then I just wanted to cover AMD. Now, I'm going to come back and say I would rather get a little deeper pullback around 140. I'm sort of deepening my thinking because we do need a better pullback than what we've had. So I don't want to pay this premium with how volatility has kind of been playing against us. So, we're toppy. We're probably going to stay toppy. But there are names I want a piece of because I do think AMD becomes a benefactor of AI. And that's one reason why I want a piece on that, right? Now, VSAT's done nothing wrong IR. We're confirming. So what are we looking for here? This is a confirm. So we're looking for at least one more divergent high. So $45 is totally viable. Now I'm just going to go and just look at Elliott Wave Absolute on the Mag 7, Nvidia. Looks like it's ready to roll over. Trend anchor is 158.20. Netflix looks like it's ready to continue lower. So I think it's going to head towards $1,000. Your secondary anchor would be 1147.51. So in other words, it breaks below this low. And of course, your base for confirming trend support would be 162.71. Looking at Apple, it looks like it's ready to blow over too. However, it still has done nothing wrong to the upside. This doesn't look done to me. This looks like a impulse leg. This ABC structure that I have here is probably invalidated. We're just going to call this 1. So we're probably going to get a 3 like that. That looks pretty viable to me. Good spot to get a rejection up there. I think this has a lot to do with how they monetize AI too. But right now it doesn't look like LuxAlgo's Elliott Wave Absolute is accurate on the retrace. They're projections, but I like to look at them on the chart. All right, Tesla. Bulls need to be very careful here. Elliott Wave Absolute has this as a corrective leg. I look at it like an ABC. So this is our A. We've now gotten our B. So now C is going to come in here. All right. Confirm on a break below this 273. So, I mean, obviously, if you're in it, because I know some of you do have this, confirming trend support would be 2337, 273.21. And that's being a little liberal. I probably would keep it a little tighter than that, maybe around 298. This as my secondary anchor, because it breaks below that, it's going to keep going. All right, Meta also looks like it's ready to roll over a little bit, maybe back to 638. The market always gives us tell. So, I would be running my anchors from the 8809 and the 691.20. Once it takes that out, then this is pretty much a given. However, I do like shopping this around $600. I do like the idea of buying this back at that, or even down at 525 if we get down there. So 600, 550, 500 would be some good to cancel orders on that in this market. And Microsoft, it's already come off just a little bit. We were looking for 478. Looks like it's potentially doing there. LuxAlgo says it's going to bounce and then go. So LuxAlgo has this as an ABC, at least on the visual. I'm seeing this as an ABC back to about 469. So I like good to cancel orders at 450 and 400 on Microsoft if we get a pullback. And, my bias here is that I don't know if we do pull back here. That's the whole thing. I don't know. I really, there's not been many times where I struggle to get a direction. And this is one of those periods of times where I am. And that just is not something that there's really no way to overcome that, because what the market's doing is if you're running any kind of stop strategy, it's taking you out of your positions because the market's no longer viable to enter and hold them. So the more your stops get taken out, the more it's telling you, well, hey, wait a second, maybe the market's not cooperating. Maybe it has nothing to do with your strategy or how you're investing or trading. It's just the market conditions, which are so choppy that you just can't stay in any trades. So that's why cash is a good position. So I do like uranium. That I also like. I'm trying to see if I can find gold. GDX. Let me just do G. Now, this is telling us something. The bid on gold is telling us that this inflationary period that we're in is not over. It's confirming. So we got at least one more higher high. Really hard to chase. But you could sell some $55 or $60 cash secured puts on GDX or GLD. As a way just to earn some premium here, because we pretty much we have a definitive direction. I mean, it's going up. It's kind of like cattle. We have a dwindling number of cows. Beef is going to continue to grow at 15 or 20% a year. So are the cost of cow. It's pretty much a no-brainer. I'm not remembering the ETF for that, but that's probably a good one to sell some cash secured puts on, because it's probably going to head in the right direction. The other thing that's got a bit, except for I'm not ready to jump on board yet, has been China. I looked at BABA about 3 weeks ago, right here in this level. I even mapped it all out, got my brain on it. I just didn't like the Trump factor here. I don't like getting Trump. You can't be on the right side of it if you're going to get Trump. But peaking drive 1, peaking drive 2. So I think it is back to about 160. So that said, a safe bet might be selling some 120 cash secured puts as just a place to park, earn some revenue while we're sitting here. And that's sort of my thought for this week, folks. Great trading. Until next time.